New Holdings, better known through its Nubank brand, has become one of the most interesting growth stories in the global banking industry. The company combines rapid customer growth, expanding financial products, strong profitability, and a highly scalable digital banking platform. After its latest second quarter 2026 results, NU is no longer just a speculative fintech company. It is becoming a major profitable financial institution. In this analysis, we will examine NU's fundamentals, growth outlook, earnings potential, DCF valuation, bull and bear cases, 2026-2027 price targets, major risks, and my final buy, hold, or sell rating. New Holdings delivered an extremely strong second quarter of 2026. Revenue reached approximately $5.88 billion, representing around 39% year-over-year growth, while net income reached approximately $1.06 billion, up about 49% year-over-year. This was an important milestone because NU generated more than $1 billion in quarterly net income for the first time. The results demonstrate that the company is achieving something unusual, very high growth, while simultaneously expanding profitability. One of NU's biggest competitive advantages is its enormous customer base. By the end of the second quarter of 2026, New Holdings had approximately 138.9 million customers, representing roughly 13% year-over-year growth. More importantly, customer engagement is also increasing. Nubank is gradually moving customers from simple banking services toward credit cards, loans, deposits, investments, payments, and other financial products. This creates a powerful flywheel where customer growth leads to greater product adoption, higher revenue per customer, and stronger long-term profitability. Revenue is one of the strongest parts of the NU investment story. Second quarter revenue of approximately $5.88 billion means the company is operating at a very large annualized revenue run rate. My base case model estimates approximately $21.5 billion of revenue in 2026, followed by approximately $27.2 billion in 2027. That would represent continued growth of roughly 36% in 2026 and around 27% in 2027. If NU can maintain anything close to this growth trajectory, the company's earnings power could increase dramatically over the next 2 years. The biggest change in NU's story is profitability. Net income reached approximately $1.06 billion in the second quarter of 2026, while return on equity reached roughly 33%. A return on equity above 30% is extremely attractive for a financial institution if it can be sustained. It tells us that NU is not simply acquiring customers and growing revenue. It is generating substantial profits from the capital invested in the business. This is one of the main reasons I believe NU deserves a premium valuation compared with many traditional banks. Another important metric is risk-adjusted net interest margin. NU's risk-adjusted NIM reached approximately 12.4%, compared with about 9.9% a year earlier. This improvement is significant because it shows that NU is becoming more efficient at generating profits after accounting for credit risk. If the company can maintain strong NIM while continuing to grow its customer base and loan portfolio, earnings could compound faster than revenue over the next several years. NU's credit portfolio increased approximately 37% year-over-year to $39.4 billion. Credit expansion is a major opportunity because loans generate interest income and create deeper relationships with customers. However, this is also where one of the biggest risks appears. Fast loan growth can be extremely profitable during favorable economic conditions, but if underwriting standards weaken or customers struggle to repay their loans, credit losses can rise rapidly. Therefore, investors should watch loan growth together with delinquency and credit cost trends. Credit quality is probably the most important risk investors should monitor. While some early delinquency indicators improved sequentially, the 15 to 90-day delinquency rate remained elevated year over year. This doesn't mean NU's credit business is in trouble, but it does mean investors shouldn't assume that second quarter's strong profitability will continue automatically. My base case valuation assumes that credit remains manageable. If credit losses rise significantly, The company's earnings could fall below my forecasts, and the stock's valuation multiple could contract. Deposits are another important part of the NU ecosystem. A growing deposit base provides funding for lending and gives NU a deeper relationship with customers. The company can then use that relationship to sell additional financial products. This creates a powerful banking ecosystem. More customers create more deposits support lending, lending generates interest income, and higher profits provide additional capital for expansion. Brazil remains the core market for Nubank and will continue to be the most important contributor to NU's financial performance. The company has already achieved enormous scale in Brazil, giving it significant brand recognition and a large customer data advantage. The long-term opportunity is to increase the number of financial products used by each customer rather than simply adding customers. If NU can increase revenue per active customer while maintaining low operating costs, Brazil alone could support substantial earnings growth. Mexico could become one of the most important long-term growth drivers. NU has already built a significant customer base in Mexico, and the company is expanding its banking operations there. Mexico has a large population and a financial system where digital banking still has considerable room to grow. If NU can replicate even part of its Brazilian success, Mexico could eventually become a major contributor to revenue and profits. However, investors should remember that international expansion requires capital and time, so the Mexican opportunity should be viewed as a long-term growth catalyst rather than an immediate guarantee. NU entered 2026 from a very strong position. Full year 2025 revenue was approximately $15.8 billion, while net income was roughly $2.9 billion. The company also finished 2025 with very strong profitability metrics. This gives us a solid baseline for forecasting 2026 and 2027. The key question is whether NU can continue growing at a high rate while maintaining or improving its profitability. For 2026, my base case forecast is approximately $21.5 billion in revenue. This assumes that NU maintains strong customer growth, continues increasing engagement, expands credit and deposit products, and benefits from operating leverage. Given the revenue already generated during the first half of 2026, this target appears achievable if the second half of the year remains strong. My bull case would put 2026 revenue closer to $22.5 to $23 billion, while a weaker environment could result in revenue closer to $20 billion. For 2027, my base case revenue estimate is approximately $27.2 billion. This represents around 27% growth from my 2026 estimate. I expect growth to moderate gradually as NU becomes larger, but the company could still expand significantly through higher customer monetization, Mexico, credit products, deposits, investments, and other financial services. If NU maintains growth above 25% at this scale, it would remain one of the most attractive growth stories in the banking industry. My base case model estimates approximately $0.82 EPS for 2026 and approximately $1.09 EPS for 2027. These are my estimates rather than company guidance. The underlying assumption is that earnings continue growing faster than revenue because of operating leverage and improving profitability. If NU reaches these earnings levels, the current stock valuation becomes considerably more reasonable when viewed against future earnings, rather than today's earnings alone. For 2026, I estimate net income of approximately $4 billion. For 2027, I estimate approximately $5.3 billion. The bull case could push 2027 earnings towards $6 billion or more, while the bear case could keep earnings closer to $4.2 to $4.5 billion. The biggest variables are revenue growth, credit costs, net interest margin, operating expenses, and the profitability of Mexico. But for NU, a traditional industrial company DCF isn't perfect because banking businesses have unique balance sheet structures. Therefore, I prefer an earnings and FCFE-based valuation approach. Using a cost of equity around 12%, long-term growth gradually moderating toward the low to mid-teens, and a terminal growth rate around 4%, my estimated intrinsic value falls roughly in the $17 to $19 range per share. My central DCF valuation is approximately $18 per share. At a stock price around $15, NU is not a traditional deep value stock. However, the valuation looks more attractive when considering its growth and profitability. Based on my estimated 2026 EPS of approximately $0.82, NU would trade at roughly 18 times forward earnings. Based on my 2027 EPS estimate of approximately $1.09, the forward multiple would fall toward approximately 14 times earnings. For a company potentially growing earnings at more than 25% while producing around 30% ROE, that valuation can be justified if execution remains strong. My bear case valuation for NU is approximately $10 to $12 for 2026, with a possible $12 to $15 range for 2027. This scenario assumes that credit losses increase, risk-adjusted NIM declines, Brazilian economic conditions weaken, Mexico takes longer to become profitable, and revenue growth falls substantially. Under this scenario, investors would probably assign NU a lower earnings multiple. The bear case demonstrates why NU is not a low-risk investment despite its strong fundamentals. My base case target is approximately $17 to $18 for 2026 and $20 to $23 for 2027. This scenario assumes revenue growth remains strong, customer growth stays in double digits, credit quality remains manageable, ROE stays around the high 20% to low 30% range, and earnings continue to compound rapidly. Under these assumptions, I believe NU can gradually re-rate higher as investors become more confident in its long-term earnings power. My bull case target is approximately $21 to $24 for 2026 and $26 to $30 for 2027. To reach this level, NU would need to execute exceptionally well. Revenue growth would need to remain above 30%. Net income could exceed $6 billion. EPS could approach $1.25 to $1.30. Mexico could scale quickly, and credit losses would need to remain under control. If all of these factors occur simultaneously, investors could be willing to pay a significantly higher earnings multiple. My overall price target framework is straightforward. In the bear case, I see approximately $10 to $12 in 2026 and $12 to $15 in 2027. In the base case, I see approximately $17 to $18 in 2026 and $20 to $23 in 2027. In the bull case, I see approximately $21 to $24 in 2026 and $26 to $30 in 2027. This gives NU meaningful upside from around the $15 level, but the downside is also significant if credit or macroeconomic conditions deteriorate. NU's biggest competitive advantage is its combination of technology, scale, customer relationships, and low-cost infrastructure. Unlike traditional banks, Nubank doesn't rely on a massive physical branch network. Its digital platform allows it to serve millions of customers efficiently. More importantly, NU has accumulated enormous amounts of customer and transaction data, which can help improve credit decisions and product personalization. This creates a potentially powerful moat as the company becomes larger. There are several risks investors must consider. The biggest is credit risk because NU is rapidly expanding lending. Another risk is Brazilian macroeconomic volatility, including interest rates and unemployment. Currency movements can also affect US dollar investors because much of NU's business is conducted in Latin American currencies. Regulatory changes are another consideration. Finally, Mexico and other international markets carry execution risk because NU must prove that its successful Brazilian model can be replicated elsewhere. I would become significantly more bullish if NU continues producing risk-adjusted NIM above 12%, maintains ROE around 30% or higher, keeps credit costs under control, and shows accelerating profitability in Mexico. I would also want to see revenue growth remain above 25% and EPS growth remain above 25%. If those metrics continue for several quarters, the market could begin valuing NU more like a global high-growth financial compounder, rather than simply a Latin American fintech company. On the other hand, I would become more cautious. If 90-day delinquency accelerates significantly, credit costs rise faster than revenue, risk-adjusted NIM contracts sharply, or ROE falls below 20%. A major slowdown in revenue growth below 15% to 20% would also challenge the current valuation. Finally, if international expansion requires substantial capital without generating improving profitability, investors could question whether NU's growth strategy is creating enough shareholder value. Putting everything together, my estimated intrinsic value is approximately $17 to $19 per share, with a central DCF value around $18. My base case 2027 price target is $20 to $23, while my bull case reaches $26 to $30. The valuation therefore provides attractive upside if the current growth and profitability trends continue, but investors should recognize that NU remains considerably more volatile than a traditional mature bank. My final rating for new holdings is BUY. I believe NU offers an attractive combination of high revenue growth, strong customer expansion, increasing profitability, approximately 30% plus ROE, and significant long-term opportunities in Brazil and Mexico. At around $15 per share, I don't consider NU extremely cheap, but I believe the valuation is reasonable relative to its growth potential. My 2026 base target is $17 to $18. My 2027 base target is $20 to $23, and my 2027 bull target is $26 to $30. The bottom line is that NU has transformed from a fast-growing fintech into a highly profitable digital banking platform. The investment thesis is built around a powerful cycle. More customers lead to more deposits and product usage, which creates more lending and financial services revenue, which generates higher profits and additional capital for expansion. If NU maintains strong growth while controlling credit risk, I believe the stock can deliver attractive returns through 2027. Final rating. Buy.2026 base target, $17 to $18.2027. Base target, $20 to $23. Bull case, $26 to $30. Bear case, $12 to $15. The biggest factor to watch is not customer growth. It is whether NU can continue growing rapidly without sacrificing credit quality and profitability.